First of all, hello and welcome. Thank you very much for inviting me to speak today. My name is Gene Hoffman. I'm the COO and president of the Chia Network. The Chia Network is a company founded by Bram Cohen to develop and support a brand new blockchain with especially interesting new smart contract capabilities. So I'm here today to tell you more about Chia. We are focused on three major things. First of all, we've come up with the first new Nakamoto consensus since Bitcoin in the last 11 years. It is a Nakamoto consensus. Instead of using compute, it uses space. It's called proof of space and time, and I'll come back and talk about that more in a second. We're using that to fundamentally drive a whole new smart contracting environment we call Chia Lisp. We think Chia Lisp and the design decisions that we've made will make programmable internet money both easier to use than cash and scalable, maybe the best token asset issuance platform ever, as we move to a world where equities and carbon credits and foreign currencies all trade on one chain. And then importantly, we've taken a very different approach to how to build and scale this type of financial infrastructure. We've built a Red Hat style enterprise software company. We have never sold our coins for investment money, so they are not securities in the United States and around the world. And we're going to ultimately take the company that supports this public very much in the way that Red Hat helped the deployment of Linux globally in the last 20 years. So first, let's talk about those three big things. Proof of space and time. First, Bitcoin is so close to perfect. It has only two real flaws, one being that its programmability is still pretty narrow. But the other one, and this is the one that's most important, is that proof of work didn't end up working the way that Satoshi originally had hoped it would. If you read in the Bitcoin white paper, Satoshi says maybe one CPU, one vote will work. And he was talking about defending from Sybil attacks and other kinds of things to create a secure distributed database. Now, the idea here is that even as you watch this, your CPU is relatively idle. There's quite a bit of over-allocated CPU just on your machine right there, much less than the entire world. But it is a bit of a software developer's conceit because most any math algorithm can be done in custom hardware much, much faster than it can be done on a generalized CPU. And so instead of one CPU, one vote, we got one coal mine, one chip fab run, one vote. And, that's reflected somewhat in some of Bitcoin's statistics. At its peak, it had 220,000 full nodes, but these days it hovers around 65,000 full nodes. So Bram and I both looked at this and felt that it would be not the right answer for proof of work to end up taking up something like 20 or 30% of the world's baseband power if we truly got programmable internet money deployed everywhere. So Bram came up with a new solution to use storage, hard drives, to actually secure a Nakamoto consensus. The way this works is that you take your unallocated space, you fill it with cryptographic bingo numbers is the best way to think about it, and whoever has the closest number to the number called by the bingo master, and by the way, that's proof of time, will be the winner for that block. Your chances of winning are directly proportional to how much space you have allocated to the network versus the total size of the network. And this is importantly not like other sorts of storage coins. The storage is not being used to vend data, to take other people's data in. It is intentionally being used to show that you're allocating underutilized storage, fundamentally. We like storage a lot. Storage has this great aspect that there is no such thing as an ASIC for storage. Well, there is. It's SSD, and we're excited about being partially responsible for hopefully moving the hard drive to SSD switchover up in time because it becomes even more energy efficient to use SSD in empty SSD space. The other thing we love about storage is that, if you're done farming, you have something you can do with that space. You can put a database on it. You can put the family photos on it. There's not really a purpose for an Antminer 19, a Bitcoin ASIC, when its life is over. The other thing about storage is that it is something that the entire world has already significantly invested in. All of the world's governments, all of the world's banks already have storage. They've already bought large amounts of storage and are often some of the larger storage customers. And so it creates a very compelling environment where 51% attacking a storage network at scale, like Chia is actually really hard to do. And it's something that takes a year or two. You'd have to either build new SSD plants, new hard drive plants. These are not small undertakings and would take considerable time. And since storage is everywhere, it's very accessible. We have a Kenyan hackathon group that is actually using proof of space and time based Chia because they could actually farm it in their local situation. The power they have is either expensive or intermittent. And the thing is that storage farming works better for them. And we see this in the statistics. Chia is now the largest public blockchain by node count ever. We peaked at around 750,000 full nodes. We're coasting around 250 to 350,000 full nodes as I speak this today. And that just goes to show you how much more diverse and decentralized Chia actually is. Now, normally, it would be enough to have come up with a whole new revolutionary consensus algorithm that uses something like 300 to 1,000 times less power per unit of security than proof of work. But that's not enough. Bram and I believe that the real opportunity here is to put programmable internet money into the entire world's economy at all sorts of different scales, both on the high end between banks transferring billions of dollars around, to the low end as immigrant families send remittances back to their underbanked or hard to send to countries around the world. Chia Lisp is our new smart contract environment. Chia Lisp is really interesting in that it is simplifying Bitcoin. It takes the Bitcoin UTXO model, the spent coin model, simplifies it, and therefore makes it much more powerful. Because of the way Chia Lisp is designed, we can do all sorts of things like a full DeFi stack in the Bitcoin style model so that you can do lending and you can have price oracles. And in fact, we actually advocate using dumb price oracles that can be manipulated because in Chia, they can only be manipulated in one direction. But the more important things are what it allows people to do. Today, if you have personal custody of crypto, it feels very much like carrying $100 bills around in a brown paper bag in a bad part of town. You are more likely to lose your coins than have them stolen because you forget your passphrase or your hardware device breaks. And today, the way you generally work around that is you write down 24 words as a backup to your hardware device. We think it can be done better. So one of the things we're going to be shipping shortly is what we call slow paper wallet. So instead of those 24 words being exactly your backup private key, they instead are a smart contract. And that smart contract would allow your wallet, which you've lost, presumably, to be transferred to a new third wallet that you'd specify after you type those 24 words in. But you would preset it so that it would take 36 hours and maybe 5% of the value of the wallet at the time that you release this transaction. And of course, if it's yours, you borrow the 5% from a friend, and 36 hours later, your money is back in a wallet you control. But if someone steals that from you, and that's the problem with the 24-word wallet on the other side, and they put that on chain, well, first of all, they had to stake 5%. Second of all, you now have 36 hours for your wallet to announce to you that someone's trying to take your money. Are you okay with that, or would you like to take it back? It's these kinds of things that will make crypto much easier to use. And then we're also deploying a thing we currently call colored coins. We're about to rename Chia Asset Tokens, or CATs. CATs allow any issuer to issue their own asset on-chain. And once issued on-chain, it is a native component of the Chia blockchain. So if you issue your asset, let's say you issued a carbon credit, your carbon credit would immediately be tradable for every other pair that's already on-chain. And one of the neatest features of Chia is partial offers. So if you wanted to buy, say, 10 of these new carbon credits, and all you had was Chia, you could say, create a transaction that had 10 Chia in it that you were offering to buy one of these carbon credits. And of course, since you don't have the carbon credit, you kind of create it from thin air, and this transaction is invalid. But you can post it on Reddit, you can email it, you can text it to someone who might have that carbon credit. And they can simply take the other side. They put that carbon credit in and they claim the Chia that you're willing to spend. They sign it. The signatures combine together and they submit it on chain without interacting with you at all. And it goes through. You can think of it like a bidder and ask. It is an all or nothing offer. And we actually think we can go further than that. So it really opens up some tremendous trading ability where both decentralized market makers, semi-centralized market makers, and fully centralized market makers can make these markets across all sorts of different assets, be they securities, bonds, carbon credits, carbon bonds, foreign currency, central bank digital currencies. We think there's going to be a vibrant 24/7 market on the Chia blockchain. And then, as I said, we did something a little different. We believe that the number one way to sort of deal with the governance problem of building a blockchain project is to use one of the best tools that humanity's created. It's the 400-year-old joint stock corporation. As we've learned in the last couple hundred years of Delaware law and the last 50 to 60 years of the NVCA, and now new ESG best practices for governance of an entity. The Chia company pre-farmed 21 million coins. We're using those coins primarily to be the asset against which we're able to raise equity. So we have sold good old-fashioned equity to folks like Richmond Global Ventures, A16Z Crypto, Naval, True, Slow, all sorts of the top investors in this space. Ultimately, we plan to take that company public. We believe that by having our equity listed publicly, it will both serve as a bit of a proxy for our coin value, but also will allow the type of full transparency, audited financials, all of the things that investors really need from an investor protection perspective, as well as real teeth to our governance of that pre-farm and being able to be held accountable for what we say that farm can and can't do. We ultimately think it's much easier to raise fiat and pay development teams and other people in the ecosystem and invest in other companies using fiat for now. We ultimately aim to change that, but in the near term, fiat is going to be the thing that most people tend to use to buy dinner. That company also serves to do two major things. It is to support the developer environment. We have things like cultivation grant, which is the ability to give a company somewhere or a project anywhere between $30,000 and $250,000 to build a prototype, get an initial version in market. Later, we're going to be doing things like smaller investments in some of those ecosystem players. And then on the other side, well, first of all, we'll be teaching Chia Lisp. We're going to be doing hackathons around the world. Currently, a third party did the very first hackathon and is going to be wrapping up here shortly. We're going to continue that pace and buy a lot of pizza and beer around the world because we want to teach all the development community the power of Chia Lisp and how you can do all of the advanced things we've all wanted to do with programmable internet money with better custody as well, so it's even easier to use than the previous versions have been. On the other side, we think that there are governments and banks that have real needs today for the things that blockchains provide. And for them to be able to adopt for real things like central bank digital currencies, tokenization of carbon markets, they're going to need real professional services, real software support, help designing and building these custody solutions, help design and build the features of their token asset issuance. And in that model, we are building a professional services organization, a Red Hat style software company that helps them make those first steps. Longer term, we think we kind of come from those two ends of the markets toward the middle. But in reality, Chia could be a revolutionary major technology if only it changes how cross-border payments and markets work. So, to sum up, we believe we have created the first new Nakamoto consensus. We believe it is more secure than proof of stake and much more energy efficient than proof of work for, frankly, a global scale. We think about security as against governments versus governments, not just hackers and others. We think it's got to be that good. We've also invented Chia Lisp, which we think is a much more secure and auditable language. One of the things we like to say that if you're familiar with Rust, as Rust is to JavaScript, Chia Lisp is to Solidity, which is Ethereum's programming language. It is a little harder to start. You have to think a little differently. But when you do, you've done almost all of the work necessary to audit your code and know for sure, to be able to do things like get an SSA A18 audit that will show you for sure that your code does what it says it does. Ultimately, for governments and banks to adopt blockchains, the CIO of those banks or those governmental departments need to be comfortable they're not going to lose their job because someone lost $1 billion due to a smart contract error. That just can't be. And then finally, we've built an important and valuable team, an amazing group of developers, an amazing group of go-to-market folks, and we're going to help foster the actual adoption in the real world of off-blockchain use cases, some of which could never have been done before in the real world, especially in things like the green carbon markets, where we think that will make a significant impact to the global financial markets. Thank you very much.